off on the 29th of September. But for now, we're moving on to Britannia. We're being joined by Mr. Varun Berry. Keep in mind, Britannia's stock soared 15% after the company posted better than expected first quarter results. The company did report a 13% jump in its June quarter net profits driven by volume growth. Mr. Varun Berry, thank you so much for taking time out to join us here on ET Now, on Earnings with ET Now. Firstly, take us through the top line growth driver. How much has come through volume growth and how much through price hikes?
So 100% has come through volume growth. So if you look at our results, 8% is our volume growth and so is the revenue. So this quarter was, we actually weren't able to get too much of pricing going. We were only able to get some of the promotions that we were running out. And hence we've seen everything come on the back of volume growth.
All right, you mentioned that category growth has remained subdued. Now, could you tell us, which categories are these and what exactly has caused that and whether the weakness will continue going forward from here on?
Well, I'm a born optimist. I do think that the weakness will not continue. While it has continued for a long time, I do think that a good monsoon coupled with the 7th Pay Commission as well as the government's action. I've started to see a lot of action from the government which hadn't happened. I guess they were consolidating their position, but of late a lot of programs have started to get executed. So all three of these are going to lead to demands coming back, I would say. It's not going to happen in a hurry. But I do think in the next couple of quarters we will start to see much better growths in the category.
Could you tell us which are those categories?
So we operate in categories which are in bakery and dairy essentially. So I do think that the biscuits, cakes and rusks will start to see some uplift as far as demand is concerned. The worry really is going to be in the international markets because we've got a fairly large business. I won't say a very large business, but large enough in the Middle East and Africa where we're seeing some currency crises as well as certain markets completely closing out. So that I do see a little bit of a weakness there. But overall, I think domestic demand will start to come back. And, we have the world as our playground as far as our international business is concerned because, there are lots of countries where we are not available. So, the objective will be to make sure that we increase our footprint and get to more and more countries and get more demand going even in the international markets.
All right, will the price hikes you've undertaken or plan to undertake, cover the all-important rise in input costs? Also, are you worried about market share losses due to price hikes?
So, I would say that the price hikes that we are taking are fairly strategic. We are taking it in the right segment, the right pack, the right geography. However, the onus is on the market leader to make sure that they take the, take the price hikes. I think over a period of time, the pricing competitiveness will come back as far as we are concerned. So, it's not a situation where we feel that, this is going to get, to a situation where we lose share. I don't think that's going to happen. We will remain competitive. We will take this strategically. And we think that because of the inflation in most commodities, it will be imperative for competition to follow us as well.
Right. Right. Now tell us, do you think the input costs will continue to see more up move going forward? In light of that, what exactly is your cost-saving strategy, so to speak, and what do you target to your medium to long-term margins to be?
Yeah, so we don't give an outlook, Krishna, but what I can say is that we have always had a very strong cost effectiveness program, as we call it. We try to find at least 2% cost savings year on year on year. And this is not cycling the savings that we got from last year. These are fresh cost savings. And after what we saw of the commodities this year, we've hiked that to almost 2.7%. So we are looking at getting 2.7% cost saving throughout all lines of our P&L. And I'm happy to report that we are moving in the right direction as far as the cost savings are concerned. So the price hikes, strategic price hikes coupled with our cost effectiveness projects, we feel good about where we are at. And I do think that we will have to concentrate on more and more of what we've been doing, which is getting better execution in the marketplace. And I do think that's helping us ratchet up and keep our head ahead of competition.
You were talking about the African market. Tell us, how much do Africa and Middle East contribute to the top line? Could you quantify the hit you've taken in terms of top line growth over there?
No, so it's not a large part of our portfolio. It's probably about 4% of our total portfolio. But every part of the business counts, and it is a profitable part of our business. So we do want to make sure that we don't lose any part of our portfolio in a year like this, where demand has been slightly stymied versus what we'd expected. And that's the reason that we are looking at every possible potential country for our international growth.
Advertising and promotional spends have also been an area of a continuous expense. What is your plan there, and in terms of distribution as well? Could you give us an outlook on that?
So, as far as distribution is concerned, we are continuously moving upwards. So, in the first quarter, we've gained about 60,000 outlets. So we were at 1.26 million when we ended the last year, and now we are at 1.32 million outlets directly. And our total reach, including our indirect reach, is almost at 4.7 million outlets. So that is one area where we've been really pushing hard. Our spends, despite... so what's happening is that it's a situation where the demand is not as per what most companies has expected. So as a result of that, everyone's trying to get volumes out of giving discounts and trade loads in the market. While we've kept our belt very, very tight on that, despite competition's aggression in that area, we've kept our belt very tight. And we've countered that through our execution, which is, the gain in distribution through the innovation and the new products that we've launched. And that combination is working quite well for us.
All right, Varun, I'm going to ask you this. The monsoons have been good so far. GST is a step closer. The 7th pay commission is all in place. In this context, do you think that you will be able to top this volume growth for FY17? How exactly is the Q2 shaping up?
No, so we don't give that outlook, unfortunately, Krishna, so I can't tell you that. But we will make sure that we put all the right efforts to get the volume, get the revenue, and get the profits as we move forward.
All right, one last question before we let you go. Tell us, what are the new categories you're planning to enter? We know that you're going to be youth-centric and stuff, but could you be more specific?
So the first stop for us will be to make sure that within the bakery segment, there should be no sub-segment which we are not present in. So if you were to look at the bakery segment, you will see that there are certain sub-segments which are emerging, right? So rusk, cake, all these are emerging segments. We dominate them. So we will continue to ratchet our performance in those segments. But there are certain other emerging segments as well, like filled croissants. It's a segment which is emerging. So we are looking at how do we partake in that segment. There are certain value-added cakes. There are certain value-added desserts, so to say, which are also emerging. So those are the segments that we'll partake in first. But as I've said in the past as well, the objective really in the long term is to become a total foods company. So we will continue to look at even adjacent segments, adjacent in the snack category, adjacent in the ready-to-eat, ready-to-cook category, adjacent in the breakfast category, and see which are the segments that offer us the right potential from a volume as well as from a profit standpoint. And we will be very happy to enter those segments. And especially now when we've got a great R&D center in Bangalore where we have the capability to produce and test all these products with consumers, I think we will be in a much better position to decide the right segments for ourselves.
All right, Varun, I can't wait for those filled croissants from the Britannia stable. But on that note, we'll wrap things up. Varun Berry, Managing Director of Britannia, thank you so much for taking time out to be with us here on Earnings with ET Now. And with that, we wrap things up here on this edition of ET Now News First at 5. Thank you so much for watching. This is Krishna Kumar signing off.